Good evening, ladies and gentlemen. I would welcome to Eicher Motors results call. I would now like to hand over the call to my colleague Vasudev to make the introductions of the management. Vasudev, over to you.
Thanks, Divya. Thanks to Eicher Motors management for giving us the opportunity to host the conference call. We have with us Mr. B. Govindarajan, CEO Royal Enfield, and Mr. V.K. Agarwal, CEO VECV, representing the management. Today, Mr. Govindarajan will take us through Eicher Royal Enfield related discussions. Over to you, sir, for your initial comments.
Thank you, Vasudev. Hi everyone. Welcome to Eicher Motors Limited call for the second quarter financial year 22-23. I hope all of you are doing very well. Glad I've had the chance to meet some of you in the investor call very recently, which we had at Chennai. With regard to the performance of this quarter, I'm very happy to announce that we have had an exceptional quarter. As we have reported our highest ever revenue from operations and highest ever profit after tax. We are continuing to achieve our milestones both at Royal Enfield and at VE Commercial Vehicles. At Royal Enfield, we started this quarter with a spectacular launch of the all-new Hunter 350 on our well-refined J series engine platform. We did it at Bangkok with all the global media, and it was a huge reception. And very recently, 2 days back, we also launched our Super Meteor 650 on the twin platform at EICMA in Italy. I'll talk you through about these in details over the period of time. The festive season in India has brought in a very strong sales for Royal Enfield. We are riding strong and have recorded more than a 30% market share in H1 for more than 125cc. In line with our broader vision for sustainability, we announced an unique and interesting partnership with UNESCO in August, wherein we'll collaborate with them to promote and safeguard the intangible cultural assets of India, starting only at the Himalayas first. Our ambition is to partner with at least 100 Himalayan communities to adopt sustainable living practices by 2030. We are very proud of this partnership in the overall as an Eicher Motors level. At VE Commercial Vehicle, we continue to focus on strengthening our market share in the heavy-duty trucks and buses segment. Mr. Vinod Agarwal will talk us through about that at a later point of time. Overall, at Eicher Motors level, we continue to maintain a razor-sharp focus on our future strategic growth plans, along with the robust ESG vision. We are elated to share that we have improved our position in the Dow Jones Sustainability Index. Second year consecutively, we are now among the top 10 in the emerging markets category. To conclude, at an Eicher Motors level, we are very confident that we are on an accelerated growth path. Moving on to the financials, our revenue is about 3,519 crores for Q2, which is our highest ever quarterly mark, up by about 56.4% from 2,250 crores last year. Our EBITDA is about 222 crores, up by 75% year on year, against about 470 crores last year. This is only marginally below our highest ever mark reported in Q1 of this financial year. Our PAT stood at about 657 crores, which is the highest ever for PML, up by about 76% on YOY basis, as against about 373 crores reported last year. Now I will talk you through something about what has happened as in highlights in the Royal Enfield. Royal Enfield has an exceptional quarter in Q2, and we have accelerated our growth momentum. That's what we briefed you when we were there in the investor meet also. The first of that particular product which was propelled our growth is the Hunter 350 launch. The consumer response and from the media has been outstandingly well. And everyone now start looking at the inquiries are going up, bookings are going up. That's a very good sign. We wanted that this has to give an additional volume to us in overall, and it has exactly landed in the positioning which we wanted for the product, which gives us an additional volume for those consumers who were looking for a Royal Enfield motorcycles in a different format, and Hunter answered it bang on onto that area. We have rolled out on the Hunter more than about 55,000 motorcycles already since the launch, which we did in August. Our order books are very good. It is very healthy. It is growing. Hunter, we wanted it should get new consumers from the new geographies, and that's what is the initial thought. And it should not cannibalize something in our product. And we are seeing that positivism, that it is not cannibalizing, and it is getting us new consumers, first-time buyers, the guys who are really enjoying the motorcycles, who are looking for a Royal Enfield apt motorcycle has got addressed through this Hunter. We are just opened it only in India till now. In the month of November, we are opening an APAC. Subsequently, it will be to EMEA and to RENA and all other areas in the markets. The Hunter is also ramping up now. So to that extent, we'll start opening up the market. But as I mentioned, it is a J series, which is the overall, it's a Euro 5 compliant. It is a global product. That's how it is envisaged. That's how it is landed. So anywhere it can go. We don't need to wait for some more homologations and all those things. Also, the things are done and dusted, and it is ready so that the vehicle can be exported as of now. On November 8th, or 2 days back, we unveiled all new Super Meteor 650 at EICMA in Italy. We have seen very exciting initial feedback from the media and from the community who has been seeing this call is full. Everybody's now looking at and asking a lot of details on this. The Super Meteor 650 is an authentic retro thoroughbred cruiser, and on a successful 650cc platform. And we have a lot of learning and legacies of the cruiser making. 1950s, we were making cruiser and then exporting to United States. The Meteor has actually taught us a lot more in cruising, what is that it has to be, what the consumer wants. Super Meteor 650, which has been there in the thinking and making for the past 3 years, is when we launched, and exactly the media came back and then said that's the very accessible, simple, easy to handle, Royal Enfield looking retro styled cruiser. So we're looking forward for a great success even in that particular product. For the quarter, we sold about 203,451 motorcycles, which marks about 65% growth from 123,515 last year. Sequentially 9% growth over the previous quarter. Domestic volume, we sold almost about 183,067 units during the quarter in India, reporting an increase of 73% YOY and a growth of about 16% sequentially. The festive retail feedback from the field has been very strong, and we recorded our second largest festive retails during the September-October window. Our international market, we continue to progress on our vision of becoming a global motorcycle brand from India. On a YOY increase of more than about 14% at 20,384 units against 17,900 units in the previous year. International retail performance for H1 has been very robust. We have clocked a solid growth of almost about 40 to 55% across various regions. RE is now the leading midweight brand in the UK and among the top 3 in Europe. That's a proud moment for all of us when we were reaching that market share positions. Our market share have climbed up to 7% in Americas as of now, and 9% in APAC, and about almost 10% touching in EMEA region, backed up by robust pipeline of new products which we are launching. This all is without the Hunter which was there, because Hunter will open up the entry level even in an international market. As far as the retail network expansion is concerned, we have been steadily moving ahead in our domestic network expansions. We have a network of almost 2,130 retail outlets, 1,083 dealership outlet format, and about 1,047 studio format. An international market, we continued expansion with an addition of another 6 stores, exclusive stores in the Philippines, Mongolia, Vietnam, and Thailand. We are slowly opening up one by one all the markets. As we are always saying, as a brand, we always wanted to be a full brand. So go there, open one showroom, make the product experienced, and people start feeling the product. And that's how the experience will start building the brand. Then we will go in for an expansion. And that's the phase we are entering. So the expansion phase which is taking place. As of now, totally we have almost 710 multi-brand outlet and about 175 exclusive stores outside India. And that expansion plan is continuing with the new products which are coming up. The expansion also will go on in that sequence. As well as the motorcycle and ride events, we did the 11th edition of One Ride, where Royal Enfield enthusiasts across the world gathered to ride that one ride on a particular day. And we also kickstarted the Royal Enfield's Continental GT Cup. We did last year, and this year also it's been getting received very well by the young guys. There's a lot of traction which we are seeing that for this sort of racing. As is not a true racing motorcycles, but it gives a fun type of retro racing. It's a sports, and that's actually getting a traction in the GT Cup through that road. Before I conclude, I would like to share another achievement from Royal Enfielders. In the dealer satisfaction survey, which was conducted by FADA, Royal Enfield emerged as a second runner-up, which compared to last year, it was a CF change which is there. So the dealers also started looking at the growth is coming back and things are better. Our connect is becoming better. And overall, this quarter had been an outstanding one and an H1 level. It's been a record growth for Eicher Motors and at Royal Enfield also. Now, I'll hand it over to Mr. Vinod Agarwal to walk us through the VECV financials and updates. Over to you, Vinod.
Thank you, Govind, and good evening to all of you. Let me first start with giving you an update on the commercial vehicle industry. If you look at the CV industry, as you all know, after 3 years of recession, the CV industry is on the growth path, and it's continuing to grow every month. And first 6 months have been very good for the industry, where the industry 3.5 ton and above, it has grown by 68%. And even in the month of October, the growth has been 15%. So based on this growth, of course, it is expected that this year we will make good progress for the overall industry, even though we may not still touch the earlier peak of 2018-19. But in some of the segments, it might be new peak, like for example, in 5 to 15 ton trucks, it is likely to be new peak. Even though in heavy duty and in buses, still it will be away from the earlier peak. But of course, we have also seen in the past that whenever the recovery happens after the recession, it always leads to a new peak in 2 to 3 years. So therefore, this time also I am of a very firm belief that we are likely to see a new peak in the coming 2 3 years. Of course, there are headwinds which are there, which are coming from inflation and global situation as well as interest rates. But at the same time, I think the outlook for the Indian economy for the current year, as you all know, it is 7%, and future also relatively much better than the global markets because of our own situation in Indian markets, because of our dependence on the domestic consumption, even though there may be impact on exports. And we also experience the similar impact in our export markets, like the truck export markets. We are having major headwinds because of the global situation, especially the foreign exchange situation of some of the South Asian markets, like Bangladesh, Nepal, Sri Lanka. And as a result of that, the markets there are down because there are a lot of import restrictions in those countries. Nevertheless, as I mentioned, the growth for the industry is good. And even in the month of October also, we have seen the industry growth of 15% as compared to October of last year. And as you all know, last year, second half itself was a much better year and with a good base. And with a higher base also, we have seen the growth of 50% in the month of October. Now, in line with the industry growth, we continue to also grow in VECV. And specifically, I think the highlight has been our good growth in the heavy duty truck segment, where our market share in the first 6 months, both Eicher and Volvo put together, Eicher and Volvo trucks, it's now 8% plus. We are at around 8.2%. and for Eicher brand itself, it is around 7.5%. As you all know, this has been our one of the biggest objectives, that we should grow in the heavy duty truck market, because heavy duty truck market is very large, and if we start growing in that, then of course the potential for VCV in heavy duty trucks is going to be much stronger in the coming years. Then we are also growing very well in buses. Buses, our market share in first 6 months is now reached between 24 to 25%. So that is again a very good growth as compared to the previous years. In the light and medium duty truck segment, we continue to maintain our strong position of 28 to 30% market share, and our strategy is to sustain that strong position while slowly and steadily going in the heavy duty trucks as well as the bus segments. Now coming to our financials, our revenue for the Q2 this year, including the other income, it is 4,215 crores as against 3,152 crores last year. So at a 34% growth in the total income. And first 6 months, it is 8,148 crores as against 4,792 crores in last year first 6 months, with a growth of 70% in the top line in first 6 months. As far as EBITDA is concerned, this Q2, our EBITDA is 249 crores, which is 6% at net sales, and as against 170 crores, which is 5.6% of net sales the previous year Q2. And the first half year, our EBITDA is 467 crores at 5.9% to net sales, as against 188 crores at 4.1% as on the net sales for the first half of last year. Our profit after tax this quarter has been 81 crores at 2%, as against 17 crores at 0.6% last year Q2. And first half, our PAT is 1.8% as against loss in the first half of last year at 1.3%. So therefore, in spite of very strong competitive pressures, as you can see, we have continued to show good performance in financials, and with a good potential to grow. And relatively, we are doing better as compared to the competition as far as the margins are concerned. And then, of course, we have also last quarter, the another highlight has been introduction of our electric buses. We have just executed 40 buses, electric buses order for Chandigarh city, which are running very successfully there. We also launched new models in the buses, both in the Volvo bus and Eicher bus range, sleeper coaches, which are again state-of-the-art buses. And we also introduced left drive trucks for the export markets, and also new bus models in the export markets in the Middle East. And another good recognition for VCV has been the second year in a row we were rated as number 1 in dealer satisfaction in the survey conducted by Federation of Automotive Dealers Association, FADA. And we continue to be number 1 this year, as well as we were number 1 last year as well in the survey, which puts us in a good advantageous position to create good customer satisfaction. So all in all, I think we are in a good position, and we are doing very well as far as the volumes are concerned, and we should grow with the market, and of course the financial also should grow in line with that. So with that, now I think I hand over back to Govindarajan for any last remarks.
So thank you, sir. Just one point is, I'm just passing in Mr. Siddharth's inquiry is slightly under weather. He's not able to attend this. So that's why me and Vinod are actually handling it. And Eicher Motors, I'm just reading it on behalf of him. Thanks for joining. I think it's been a good quarter and the H1 for VCV and Royal Enfield and overall for Eicher Motors Limited. Thanks for joining this call. Now, I think we can move to the question and answers. Back to you, Vasudev.
Thanks, Mr. Govindarajan, and thanks, Mr. Agarwal. Yes, participants, we can now start with the Q&A session. So requesting you to raise your hands or write your question in the chat box. So we can start the first question from Gunjan Prithyani. We'll request you to unmute and ask your question.
Sure. Hi, thanks for taking my questions. Sir, in your introduction comments, you mentioned that, the Hunter has seen a different set of customers. Could you share a little bit of color on how the addressable market has changed, either in terms of, the age profile or the geography, a little bit more color around that? And, what sort of order backlog, wait periods are going on there? And is there a thought process to ramp up the capacity on the Hunter platform? That will be the first question.
Oh, hi, Gunjan. As far as Hunter is concerned, the first-time buyers, which used to be normally about 15%, that range, it has jumped to almost about 18.1 to 18.2% in this year, post the Hunter launch. In terms of first-time buyers, if I have to talk about the existing Royal Enfield consumers, to the Hunter is only 6%. First-time buyers, it's going up, and upgrades are also coming up into this. What is Hunter doing, and what is the confidence which we are having? I think during the launch also we were explaining. This is a product for those consumers who love the brand Royal Enfield, and he wanted to associate with the brand Royal Enfield, but he wanted a motorcycle which is a bit more accessible, slightly lower in weight compared to the motorcycles which we are having in us, like Classic or Bullet. And it has all the ride and handling ability for a tight situations in a traffic level. And that's where we were looking at, and it should get new consumers and not cannibalizing with the existing thing. Happy to share with all of you, the cannibalization is almost nil. Marginally will it be there because of the price point? Some people can take a decision here and there, but it hasn't been any materially different in terms of the cannibalization. In terms of age group, the Hunter in this new format, it is the 18 to 25 age group. It's almost touching 40% in Hunter, and about 26 to 30 is almost under 43%. So it is more and more the younger audience who are coming into that. So what we wanted out of the Hunter is exactly got positioned in that particular form. It's adding volume, and it is adding the new consumer set into Royal Enfield. And that's where we were looking for, which has Hunter has answered to us.
Anything on the geography or, also, wait periods, order backlog, production, thought process, if you can share on that?
Yeah. Hunter, it's a product now. It is available pan India, and in terms of numbers, we have rolled the 50,000 motorcycle we have produced. So to that extent, you can see there is continuously going. This is on a waiting period. It is a healthy waiting period as of now. Not because of anything else. We anticipated both the Retro Hunter and a Metro Hunter. That's what we launched. Retro Hunter at about 1.49 and a Metro Hunter at about 1.62 and 1.69. And that price point when we launched, we were assuming the Metro, the Retro one, which is 1.49 lakh also, people will look at it. It's good for us as a company, and the consumer was enjoying. Now the Retro, the percentage is very low. So the Metro is the highest. It's actually an upgrade which is actually happening, which is a very good sign. That's what we were wanting to do. That has taken. So what has happened is the exclusive part for Metro at an assumed level, we wanted to increase it so that the higher percentage of Metro can be given to the consumer. We kickstarted that, looking at the initial responses. We kickstarted that activity. From November onwards, the existing numbers in Hunter per day also will slightly going up. But it is very good in terms of booking, and it is constantly increasing the numbers for us.
Okay. The second question from me is on the export side. Now, everybody's been calling out a lot of, volatility in export markets given where the macro is. Is there any slowdown that you all have seen, and how should we think about, the export scale up over the next 12, 18 months? Do we see that any headwinds on that part of the business?
Exports, as far as Royal Enfield concerned, I will just tell you, because even in the Q2, the retail had been very good for us. We have been gaining market share. In fact, some countries where the inflation is very high, to be honest, is an energy cost is so high in Europe and all. Even in those markets, we gained the market share, and we have almost about 10% market share in the middleweight in those countries. Now, Americas, both in North America and Latin America, our retail has been outstandingly good. Will there be a bit of a pressure point? Nobody can escape from the kind of an inflation and all those things. But what is promising to see, that's what we are at EICMA when we are meeting all the European people who are here, and we are launching our P4D. At that point of time, we were discussing the mobility, the demand has not gone off. So to that extent, everybody are looking at what are the new products which are coming up, and when you will actually be bringing out with the motorcycles. And we somehow feel our motorcycle, which is accepted very well, continue. Maybe 1 month because of the cold non-riding season, the retail may be lower, but we are building up for the season coming year. So to that extent, we will start continuing the production, because that's what is our entire dealer network is also asking for more quantities.
All right. Thank you so much.
Thanks. Next we have a question from Pramod Kumar.
Yeah, thanks a lot. Hi Govind, hi Vinod sir. And congratulations Govind on Super Meteor. Looks pretty good. My first question is on the kind of the discussion we had during the Investor Day as well, that incrementally you would like to focus on the absolute growth and the ROS rather than kind of focus too much on the percentage margins on the EBITDA front. So, and this quarter we have seen a bit of a step down on the margin and also on the ASP because of Hunter, right? So how should the investor community look at the margin profile of the organization, Govind, as you see Hunter ramping up going forward, and then getting into international markets as well? Because on the domestic front itself, Hunter is doing very, very well, and I'm pretty sure international markets also will be a big success for Hunter. So how should we look at this in the context of ASP and EBITDA per vehicle compared to the portfolio what we had so far, which was much more premium? So if you can just help us understand that, will be great.
Yeah, Pramod. So Hunter as a product, when we wanted to launch it, it has an addressable market at a price point which is also very accessible as a motorcycle. That's what we said. That's what we said. We are growth focused now.
Yeah.
There has to be a rebalance. That's the strategy which we looked at. That should be a rebalance between the profit and the profitability. By design, when we launched Hunter, there were some headwinds also when we were launching that point of time, which is not yet baked in. One is the commodity at a point when we were launching in the current level, there is a lot of softening which is taking place. When we launch a new product, I always say that first 3 months, let's have a pipeline of VAV activities which are required, but we won't, because it has to reach the consumer and the value proposition which we wanted to give it to the consumer. The first 3 months, we have to actually look at whether it has landed to them very well. So for us, the opportunity for the profit pool on an overall number, anyway, Hunter is bringing in. On the profitability path, which also we'll start working on, is through the commodity softening, which is helping us as a tailwind. And as I mentioned, there is value engineering activity which we will be doing it. And our capex is not going to be very high because, as I mentioned, it will be incremental. For example, from the Metro to a Retro, ideally in the platform, the number of componentries which we have changed and all, with just about 1.2 crore additional investment here or there to debottleneck, we can actually move the whole product to a 100% Metro. Even if that is what the market requires. And that's a good sign. And we assumed our profitability also with the Retro and the Metro at a particular percentage combination. Now the Metro going up more and more, it's also a good sign. And because there is a demand which is there, we also increase the price, you would have known, in the month of November on 3,000 rupees, which we have done in Hunter. So the pricing option is there. Commodity is going to help in a way which is there. So what we are looking at is the growth. And that should be a growth for us, and that's what this Hunter is bringing in. And let's keep going in that. In that site, we'll start looking at profitability also parallelly, and what is that we have to work on.
And Govind, would you kind of guide from the current quarter levels, would you expect the percentage numbers and the EBITDA per vehicle to kind of improve as the benefits of commodity kind of come in, and the price increases also kind of help you? Because and what would be the sustainable profitability, what you would be quite happy with in terms of
Pramod, as an organization, we don't guide forward guidance, we don't give it a
yeah.
But I can only tell you, as an organization, we wanted our growth focus has to come in. For growth focus, we wanted to bring in a particular product, and that's an Hunter. It answered our requirement. It actually started giving us a higher volume and not cannibalizing the existing one. Number one, that's good. Helped us in a way. Second is when there is no commodity pressure now. We are all assuming the super commodities pressure this will continue for a longer period of time. That is not there. In between, we had our semiconductors and all those things. We were actually buying it from the resellers because that's what price was higher. The logistics cost was higher. All those things are behind us now, by and large. So there are, and the value engineering, which is possible, which I'm just now kicking in the organization to say that let's start looking on one by one these things. But new products launches will come. Now there is a Super Meteor 650 which is going to come in. Initially, I thought that probably we'll give it only in the first quarter. Now it is coming up slightly ahead. So in the entire mix, I see it. There is a positive trend of this organization as overall.
No, that's great to hear. And going follow up on the more on the industry terms as well, on the RDE norms, what would be, because we are hearing that on the four-wheeler side the cost implications will be big. How do you see that in terms of a cost for the two-wheeler industry for a category like 350cc and above? What ideally will be the cost inflation what we'll see on account of RDE norms or the OBD norms? Sorry, apologies. OBD for two-wheeler. Sorry.
OBD, it has two phases, Pramod. OBD 2A and OBD 2B. 2A is only a minor thing. 2B, when it comes up, that is what is the CAD deterioration monitoring, which has to come in as a close. And 2B, when it comes up, that is when probably there may be a bit of a loading in the precious metal, possibly, which can happen. So every one of us has started already working on, if that comes, how do we actually protect it? So, for example, when we were doing a BS6, after implementation of BS6, we started looking at optimization. Now, there is a time which is there for OBD 2B. Very recently, in fact, it is in the final notification. So it will reach us maybe in a day or so. Now, we know this is the president, so it will come through from anywhere. So once that comes in, at least we have a time for 2B. It is only 2025. So all our optimization activity which we may have to do, that can be done. That's the time window which we asked for from the government, and government has given. And hopefully that should not put burden on the consumers also because of this.
And can I take one question with Vinod, sir? Yeah. Yes, sir. Sir, on the CV demand, we have seen some bit of moderation at the start of third quarter, and we got some feedback from fleet owners that they probably may be in a wait and watch mode at least till February before they kind of get a color on the macro situation and the interest rate scenario. So given that, what are you picking up from the market in terms of the demand in the near term, sir, on the commercial vehicle side, and whether this global uncertainty and higher interest rates has resulted in some bit of a pause or a rethink on large fleet owners?
I think we have to look at the overall scenario because we won't be able to answer based on the month-on-month figures or month-wise figures. If you look at the overall scenario for Indian economy, I think everyone is having consensus that we are going to have 7% growth in the current year. And sentiments for India, they are relatively much better as compared to the global situation. If you look at our GDP tax collections month after month, they are quite handsome. In fact, 140,000 crores. Plus, if there are any concerns, they are largely on the trade balance concerns. There again, I think there are a lot of things which the government is doing on the ethanol mixing. 10% already has happened, and 20% it is talking of. And so therefore, I think government is trying to address all these concerns with respect to this global situation of the increasing crude oil prices. At the same time, when the economy grows, there is requirement for more and more trucks to move the goods and services. And as you know, the 3 years have been bad years for the industry, and it was at rock bottom in 2021. Therefore, since it is a cyclical industry and economy can't do without trucks, and you also need more modern trucks to take care of the demands of more tech-savvy customers or customers who focus a lot on the productivity as well as timeliness and the costs. Like if you talk to any customer today, they always dictate that I need delivery in so and so period, and I need this cost. Now, if they have to meet these requirements, you can't meet those requirements with the old trucks. Therefore, it is imminent that old fleet of trucks have to be replaced. And since replacements have not happened in past 2 to 3 years, these replacements are going to happen. Not only because of the pent-up replacement requirement, but also because of the need of more and more productivity and cost reductions, which can be delivered only by the new technology trucks. Therefore, I would say that overall we are going to see good trends in the CV industry in the coming maybe 2 to 3 years, because we are in the recovery cycle, and still we are far away from the earlier peak as far as heavy duty trucks and the buses are concerned. Light and medium duty, still this year itself we may touch the new peak. So therefore, my own feel is that we are going to see good time for the CV industry. There may be different indications in some month or the other, but that doesn't mean anything. Even in the month of October, the industry has grown by 15% over a much better base of October last year. Because last year, October itself, the industry had started growing, and last year second half the growth had started, and even on that base, we have seen a growth of 15%. So,
and the pricing continues to get better, sir?
Pricing will get better as the industry grows. Pricing,
yeah.
As of now, it is still not better, but you have seen a lot of press statements which are coming from competition that they are also concerned about profits. How long they will continue to show losses.
Thanks a lot, sir. Thank you. Thanks, Govind. Thanks, Vinod, sir. Best of luck.
Thanks. We'll request participants to limit their questions to 2 max. Next, we have Pramod Amte. Please unmute.
Yeah, hi. Thanks for this opportunity. Since you touched upon OBD2, wanted to check one of your products still runs, the entry-level product still runs on the old engine platform. What are the plans to comply the same, or all of your products can easily go for OBD2?
It is, OBD, the 2A and 2B. And 2A is...
You have to put on mute, but there is some background noise coming.
Yeah. So all our products as of now for OBD 2A we are ready, and 2B we are working as I was just explaining. For the 2B we have to be careful that it is not adding cost to the consumers and to us also. To that extent we started working on it. We have time for it, but time to come, the transition to 2A, we don't anticipate any problem. We'll be comfortably transitioning into that.
And second follow-up question is, if I had to look at your ASP rise, first quarter was pretty impressive, and once you launched a new product, it seems to have seen a sharp QOQ drop, and as a result of which first half there's literally a flattish ASP. And if I hear you right, you're already seeing a better product mix within the Hunter. If it goes down, do you see a further pressure on your ASP in the second half, and hence you might have to take a more pricing action to drive a top line and margin expansion?
So in the ASP, Pramod, once again, first is a growth focus. That is what we actually said. It's a rebalance. It has to be a growth focused. We should get more consumers into this. we look at it the business of holistic. One was about the motorcycle alone and ASP. If you actually look at the accessories, GMAs, which all get added on to that, when the Hunter was launched, in fact, our GMA penetration has been slightly lower because we also have not brought it in time. We missed out. So that is also going to come into this. Commodity is the way we priced it at that point of time. The commodity has not shown anything substantially, and that we are expecting that it will come down. The third, which I mentioned, is as it is a new product, the value engineering projects has not kicked in. So it was all in the pipeline. We were envisaging, we were looking at, we have the whole host of activities which have to be looked at for the cost angle and all those things. But it will actually start fructifying now on. Another one lever which is there for that is the international market. International market, as of now, the product hasn't come in the Hunter, I'm just saying, because we're just opening into country by country. So overall, as we wanted it as a growth, that's what it was meant for, and it has given. Now, what we look at ASPs, profitabilities, how do we work on it, and then obviously the avenues and levers will be pulled whenever it is required, and we'll be continuing on that path.
Sure. Thanks a lot, Bruce.
And next, we have a question from Raghunandan. Please unmute.
Good evening, sir. Congratulations on the unveiling of Super Meteor. Sir, I wanted to understand that there are expectations of multiple launches ahead at the 650cc space. How would you look at the opportunity? Would export be a bigger opportunity, or would you see these models as credible upgrades for domestic market? Which one would be the bigger area you would focus on?
Look, first of all, the cruiser, the entire cruiser in India, we had Lightning, City Bike, Thunderbird X. Then we came out with the Meteor. We understand long distance ride, we understand cruising. So we came out with the 350 Meteor cruiser, which is a simple cruising one. The 650 platform has come over the time when we were riding, and we were also talking to our riding community. Everyone started looking at, we should also come out with one more cruiser on the twin platform. When we were contemplating and consuming the twin platform, at that point of time itself, we said the platform have to come with a cafe racer and a roadster and a cruiser. So we came with Continental GT and with the Interceptor 650. Globally, it has been a resounding success, and it actually created that category and groomed the category in that particular segment. Now we see this is another one product which everybody was been looking for, not a very heavy cruiser. A guy who doesn't like cruising can also get onto the motorcycle, will enjoy cruising, and it should be so accessible and simple, not a complicated cruiser. Ours is a feed-forward cruiser, but you won't feel it is a very heavy machine. So in the cruiser space, we feel there is a good space which we are entering. That's what our riders were looking at across the globe, and it is helping us in the right time which we are bringing in. When I was just unveiling it 2 days back, and all the media, when we were talking, all the European customers who are here now, and when we are gently chatting, it's coming out to be very clearly is that that's the product exactly you were looking for, and you brought in the fit, finish, and in all those things. And we will come up with a very good price point also in an accessible way, so that across the globe, that will also show us a growth potential. But more products which are in pipeline for us to bring in for India. As far as India is concerned, today I think with the long roads which are coming up and the riding culture which is gaining momentum, and post-pandemic, once again people are out there, weekend rides are starting, consumers started looking at. I can tell you now, people started actually asking me, when is that? When are you opening the booking on the Super Meteor 650? So that's the demand which is coming up. So hopefully I will be seeing that both in India and outside, both ways, it will be addressing the easy cruising for even the non-cruisers.
Got it, sir. All the best for that. Sir, my second question was on how much was the commodity impact in second quarter, because gross margin QOQ could be impacted both by mix as well as by commodity, and also commodity deflation impact do you expect from Q3?
Simple way, Raghu, yes. In Q2, it hasn't impacted into the P&L to that extent. So it will start flowing in Q3 onwards.
Thank you, sir. But would you be able to give some numbers, sir? How much benefit you expect or going ahead?
Very certainly in the next call, yes.
Thank you, sir, and all the best on the 650 side. Thank you.
Thanks. Next we have question from Jinesh Gandhi. Please unmute.
Hi. Am I audible?
Yeah, Jinesh.
Yeah. So my first question pertains to the domestic market. So excluding Hunter, can you give some color on how that our core portfolio is doing? If I look at the numbers on the wholesale basis, clearly we are yet to see material pick up in demand or pick up in volumes on that side from our normalized volume perspective. So any color on that?
If the question is towards is Hunter is coming and all the other models are not growing, Jinesh, I can tell you this is the festive season anyway. All our models also has grown. It is also a good sign. So on the booking trend, Classic, Bullet, Meteor, everything has actually gone up. What we are doing now is within Hunter launched, every counter we are watching, is it giving an additional number or it is cannibalizing? That's what I mentioned. It is not cannibalizing at this stage. That's a good sign for us. And the consumers, even in the rural side, they are also looking at the metro. So that is also increasing. In the process, other models are also coming. Having said, we are amping up our digital presence in all the products. Even for Classic, we did once again Classic refresh in the market to the digital media, and we started doing a lot of track days for our Himalayan and Scram. We are doing a college connect for all our Scram. On we actually started the flat track and weekend dirt track racing. All those areas, it is actually helping at a product level also. The GT Cup, whenever the GT Cup thing comes up and there is a buzz in the social media, in fact, our even Continental GT's requirement and the inquiry is going up. So Meteor, with a lot of news on the Super Meteor, a lot more guys actually started inquiring about Meteor. So the inquiry for Meteor also has gone up. So it's a combined effect as an organization when you come out with the new products and the adjacencies and convey that to the consumer authentically. This is what we wanted to come and give it to you. The rest of the products are also growing at this stage. But I have to give you one thing with the rider is this is the festive season. Everything has grown, so we may have to wait and watch. But I somehow have a feel that all our products, because we also have refresh plans, so the refreshes also will start kicking in. So to that extent, we see there will be a growth in every product which we have.
Okay. And secondly, on Hunter, any sense on what proportion of demand comes from, say, beyond top 10 cities or top 20 cities? Primarily, is it more broad-based in terms of demand, in terms of regional links, through regional links?
In terms of, see, we don't do it in that form. We normally look at it, we categorize in terms of more than 125cc motorcycles per month in that particular region, A plus types. If I have to tell you, the booking, which is actually coming out city-wise and all those things, it's across Hunter is actually having a response. Having said, I have to tell you, in the initial fill, which we wanted to give for the test rides and all those things, we have covered only about 70%. Remaining 30% in the studio stores and all, we are yet filling up. So we are slowly doing that. More and more opening, which we will be bringing in more consumers. So it's a pan-India, and it is not that any one particular area which is there, but the growth which we are seeing in all the top 10 cities which we have been watching, everywhere there is a growth for that.
Got it. And sorry, one last question on CVs to Vinod ji. Sir, with respect to demand from small and single fleet owners. Are we seeing them coming back? I mean, that has been one segment which was yet to show any material recovery. So, what are the trends you're seeing there?
If you look at the trends in the light and medium duty trucks or in the sub 5 ton trucks, I think the maximum growth is there in those segments, and those are the segments which have the either single truck owners or very small players. So therefore, yes, of course, for the small operators, the interest rate and the sentiments, they matter more. But at the same time, I think there is demand for movement of goods that has to be met. So I think it's coming because of the economic requirements.
Got it. Thanks. I'll fall back. Thank you.
Thanks. Next, we have a question from Kapil Singh. Please unmute.
Yeah, thanks for the opportunity. Govind sir, first, the question is to you. When we look at your production, we've in the past been facing supply shortages. So when I look at the current volumes, are you able to, supply as per market demand, or you are still facing, shortages and therefore you need to build out production from where you are currently?
Well, as of now, I'm sure we also discussed at some point of time, we are almost doing about 3,100, 3,200 numbers. The production numbers, so capacity is not a constraint, number one, because we have already built CapEx, so that's not the constraint now. Second, we had an issues of the semiconductors, availability of steel itself, all those issues, that's not a headwind as of now. It's by and large getting sorted out. I'm not saying it is completely gone or something like that, but that's not the top of the mind issues now. But all the semiconductors or the electronic components, we also started off doing inventorization, substitutions, all those activities which are required, which is also kick-started. So production is not a constraint. It's a model mix, exact model mix, which we have to align and give it to the consumers, and that's what it is. It's not a concern anymore.
Okay, great to hear that. Vinod sir, one question to you, please.
Yeah, please go ahead.
BS6 phase 2 is coming up, and if you could help us understand what is the kind of cost increases we should expect for LCV and MHCV portfolio, and what are the elements that are going to get added for that?
No, BS step 2 is going to come from 1/4/2023, and basically there are much more stringent compliance requirements, but it means that the manufacturers are responsible for ensuring that the tail emissions, they continue to meet the standards on the road for a long period of time after the vehicles are sold. So therefore the regulators, they can pick up any truck from the road and they can see that whether it is complying or not. So I think that is the major change, that your emission standards have to perform absolutely in line with the law. And if they don't perform, then there can be major implications for the manufacturers. So therefore, I think all the companies have to be very there are some additional requirements which are there. But at the same time, as far as the costs are concerned, there will be some increase in costs. But at the same time, we are also working on various other cost reduction avenues. So hopefully, let's see how it lands. When we are closer to the date of implementation, we will take a call that how much price increase is warranted because of that.
So, sir, basically, just wanted to understand. I know you will not have an exact estimate right now, but directionally, when BS4 to BS6 happened, there was a big concern regarding this. There was an element of pre-buy also that was expected. So is it going to be that large, and will there be some segmental disruptions for example, LCVs could see much higher cost increases or something?
No, it will not be. It will not be that large.
Okay. All right. Thanks. That's it from my side. Thank you so much.
Thanks. Next we have a question from Ankush Agarwal. Please unmute.
Yeah. Hi, sir. Thank you for taking my question. So my first question is on the product portfolio. So in the recent analyst meet, we had highlighted a lot of products. right? But what I wanted to understand is the product portfolio expansion in terms of new categories, right? So, for example, Hunter is a new category of product that brings a new set of customers to us, right? Himalayan was a different set of product that brought a different set of customers to us. So, in terms of product portfolio that you're looking to launch, which are the products that will expand this category of customers and not just products that are expansion of existing line of products? If you can talk about that.
So Ankush, product portfolio per se, if you look at, so we were only one platform company. There now we have two platforms. Our clean, because UC was the only platform which we had. Now we have J series and the P. We are also working on an upgradation cycles for all these platforms because we have just launched and we have done a transition in this. In the product portfolio, we always look at what is there. There are some products like Classics or Meteor, all those. They're all innovations, but it is a replacement for an existing product. Adjacencies like we did in Himalayan for an adventure tourer. Then we found Cram is one more variant which we can bring in. Let's see what kind of an experience the consumer is looking at. Globally, in these sort of categorization, one have to understand is only the experience. So now we had Meteor with an experience. We said, okay, in the platform of Twin, we can come out with a accessible cruiser of a retro cruiser style from Royal Enfield. That's what we are doing. Similarly, we did a cafe racer in 650 cc's. In a Sportster category, is there something else which we can do? At what point of time it is required? We will definitely come out with that. A Roadster category, in that, what is that the product adjacencies which is required? And those are all the thought process for the product lineup, which we continue to evolve. And we have signed up. That's why we always said that the healthy pipeline of new products on a platform base and category base have to be signed up, and then the organization have to start working on, and our capex are also dedicated only for that. To that extent, our pipeline is very healthy. We have a lot of products which we have been working on, and now in this year you would have seen we came out with the Scram, we came out with Classic. Now we are with the P4D which we are coming up. So like that, all these products will start coming up at an interval which is, the market is ready, and we will time that, and then we'll do the launching. You will see a lot of new products which will keep coming from Royal Enfield.
Yeah, I get that. What I was asking is, will there be products that would be category expanded, right? So obviously we have now launched Meteor 650, which is an extension of existing Meteor product. But something like a Hunter, which was a new segment altogether. So do we have those kind of products which would be a new segment that would bring new set of customers to us?
Yeah. That's why I said, in some way the Roadster as a category, maybe which is very strong in a 350, there is a space for 650, right? We can look at it. So what we always look at is, we are a company, we don't do too much. That is also very clear, right? We do only very little things. We do a focused approach. Whatever product which we bring in, it has to be successful, because we don't bring product and then start looking at what is an experience which we can give it to the consumer. We actually go right along with the consumer. We ride, we spend time, get the whole thing, and then say, well, consumer is looking at this sort of an experience. So whether I can come out with a variant rather than giving a full new platform development. Full new platform development is a huge effort. So what we are looking at is, when we were doing this J and the P platform, we thought this platform should be expandable in a way that it can give adjacencies experience to the consumers. And what are that? So in the core product, then adjacencies, then variants, then color refreshers. That's the cycle which we normally look at for these two platforms. That way, if you look at, be it in India and international market, there's a huge potential for us to exploit these two platforms itself. And in terms of addressable thing which we were talking about is the outside India, the market potential is so much like what it is there in India, and we have just started exploiting into the international markets. So our focus also have to be how to capture that markets outside with the platforms which are so successful now. And it is all the platform and the products are just 1 year, 2 years. So it is just getting the maturity cycle, and it takes time the product also to get the maturity cycle, then it has a huge potential. So we will not be doing many things.
Right. Okay, got it. So my second question was, like internally, like when we look to price a new product, so do we look at, profit on per bike basis, or it's more like a cost plus kind of approach that we look at?
Pricing is never on a cost plus, Ankush. We normally look at it, what is the product, who's the consumer, what's the kind of accessible price point which he is looking at from Royal Enfield, and who is the source of growth, where from the growth is coming, and what is his EMI, what is that we have to look at it. So it has to be market focused rather than looking cost plus focused, Ankush.
Right. So just to get a sense, what you're saying is, you're broadly looking at the profit pool that you can capture rather than, per bike, whatever you make. Like that's kind of it.
We never approached it like that way always, Ankush. We always looked at it. There is a consumer who wants an experience from Royal Enfield, and he is, what's the value proposition which he is looking at from the Royal Enfield. Today, Royal Enfield's success is that for the price which is paying it for Royal Enfield, he feels it's a jewel which I'm just holding on, and the value proposition is very good. That's why we always look at it from the customer in the market. What's the value which we can deliver, which the consumer feels that yes, Royal Enfield has delivered a fantastic value for me for the kind of money which he has given, and that has to be very authentic. So we always come from there rather than looking at the entire material cost plus add up and all those things that we don't do.
Got it.
Internally, we do the benchmark. We have to do the case in point as any product which comes in, we always look at it, what's the relative price index, where is the source of growth, what's that price point for them, what does it mean in terms of EMI per month if in case I price it like this. Those calculations we do, but we always look at the value for the consumer rather than just giving the pricing.
Right. That was very helpful. I have further question. I'll get back. Thank you.
Thanks, participants. That was the last question. Thanks to Mr. Govindarajan and Mr. Agarwal for replying to all the queries of the investors. For any unanswered question or any other query, please feel free to reach to Investor Relations team of Eicher Motors Limited. I'll like to hand over to Mr. Govindarajan for any closing comments, if any.
No, thank you very much. It's been wonderful interacting with you people. As an organization, we always look at we are long-term focused. Internally we say that we are long-term aggressive. Any place, anything which we do, we always look at it a long-term. And that's why even in an investor meet, myself and Vinod, we all came and then explained to you that it is a growth-focused organization, and that's what we will be at it. When we are growing, whatever the correct things which have to be done for the organization, we'll continue to do that. In Royal Enfield, EV is another one space which we are now getting into that very intensely. In fact, I'm here, Siddharth is here. We are all spending time and understanding the whole ecosystem, what's happening, what sort of a technology which has to be looked at immediately. So those are all the things. And maybe Vinod can add anything from the VECV side for this closing.
No, I think you have summarized it very well. I think.
Thank you very much. Thanks for everyone for attending this. Thank you, Vasudev, for.
Thank you very much.
Thanks, sir. That's all from the investor conference call. We can close it now. Thanks.
Thank you very much.